Hey guys, welcome back to the channel. Matt with Green Bar Trading here. In this video, there's going to be two things we're going to talk about. The first is going to be about technical analysis, how I traded Microsoft today. And the second part is why I like options so much more than taking shares. So we're going to get right into that. Hit the thumbs up for the video. And if you are new, consider subscribing to the channel. All right, so what were we looking at on Microsoft? And by the way, I absolutely love when a stock is gapping up like Microsoft was, huge gap up from the day, from the previous close in a market that is overbought. I absolutely love to fade that move. It's one of my favorite setups. So Microsoft was gapping up into an overbought market. Microsoft itself is very overbought. And the charts, we're going on to the 1 hour chart, it was gapping up into resistance. Every time we got around this 290 level, Microsoft pulled back. All right, so looking at this on a bigger time frame, this is the 4 hour chart. You can see we had that consolidation, right? Breakout, and now it's consolidating even more. But that gap up was right into resistance, right off the open, got into puts. Also, went over on Discord, letting everyone know Microsoft is opening up right at resistance. If you are interested in our Discord, joining, that link will be down below in the description. But when we were gapping up, taking puts, and then taking the trade off pretty quickly. Now, we made $120, and it was about a 15-minute trade, so not too bad. But if you look at this, I paid $2.28 per contract. So I took 4 contracts. Those 4 contracts cost $900, right? So I had to put out $900 to make the $120. So that's a great percent return. Now, if I wanted to take Microsoft short as far as shares go, well, then I would have had to buy it at about, let's just say, 290. If I bought 100 shares to get the same move that I got, the same $120, if I bought at 290, that's $29,000, right? 100 times 290, that would be $29,000 that I would have to put out to make the same amount that I just made going for only $900. Now, what do I mean by that? Well, Microsoft and the move that we were looking for was to take it short from this 290. If I took shares, I would have needed this to go to 288.80, right? So 288.80, if I got in at 290, that would be the $120 in profit. So instead, we took the options, took it down to just about, in the 288s and got the 120. Now, if you're shorting a stock, the amount you can lose is absolutely infinite. You can lose all your money. Now, granted, Microsoft is not going to go to zero today, but you just never know what can possibly happen if you're trading a stock and then all of a sudden something happens in the world with that company, a news release comes out. All of a sudden you're short. If it goes up, it could just, totally blow you up. So with options, the most amount that I could have lost on that trade was the $900. That was the most amount that I could have lost, even though there's no way in the world that it would have gotten to that point or even close, because I'm scalping options. All right, I'm just scalping it. So I wasn't going to take this all the way till expiration, where you can possibly, lose it all if it's not at your strike minus the premium. All right, I know this is a lot of information, but it will start to make more sense to you. The point of this is to take the shares, right, on something expensive like Microsoft. You buy 100 shares, and let's say you want $1.20 of a move to get that $120. You're laying out $29,000 to do it when you could just do it with options. Now, I had to do it with 4 contracts, making $30 per contract, but the outlay of money, all you needed was 900. All right. So that's a really nice return, just about 15% return on that trade. So that's a really, really good return for 15 minutes in the market. So that's why I like to trade options. Now, if you're trading shares, obviously you don't have to deal with that theta, which is the time decay in an option contract. So if the stock does not move, right? Look at Microsoft right now. It's just going completely sideways for the last 2 hours. All right, 12:30, 1:30. The last 2 hours, it has not moved at all. An options contract bought here, right here, it would still be worth less than you paid for it here, even though the price is exactly the same because of that time decay, right? Every options contract has an expiration date. The closer you get to that expiration date, the less valuable and the less premium that you hold on to. So that's why we like to scalp these really quick moves. And Microsoft, like I said, this was a great, great trade. This was a very good trade based on technical analysis. I would have had no idea to go long or short if I don't understand what supply is, what demand is. So that's just it. That's Microsoft. That's the trade. That's why I like to trade options. Hope you enjoyed the video. If you did, hit that thumbs up for me, and I'll see you on the next one. Take care, guys.